Hey guys, it's ALLIN Crypto here, and welcome back, ladies and gentlemen, for another YouTube video on this glorious Sunday. We're going to be diving into a number of things in this video, really reiterating our overarching view. And the chart that I have in front of me is the United States money supply. You can find this by typing in USM1 on TradingView. We're going to be looking at this in context with the S&P. You guys will know that it's my beliefs that ultimately the environment that we're in, the monetary regime that we're in, which is set by the US and all governments around the world are really following it, all central banks are now following it, is not one for a flourishing bull market to take place. You know, I do not believe that the bottom is in for the cryptocurrency market. It would be great if it was, but I don't think that it is. And ultimately, my portfolio represents that in regards to a stablecoin position. Could I be wrong? Absolutely. But we're going to talk about the money supply, what's happening with this money supply, what happened from March 2020 onwards, you know, which was just unstable, unfathomable money supply growth that cannot continue. And I believe that what at the asset market is about to experience or is starting to experience is a colossal hangover from the party that was the money printer going burr from March 2020 onwards. So I'll be talking about that, bringing the S&P up in relation to it. Looking at a number of things, you know, we had the non-farm payroll data, and this was a tweet that I thought was great. It said, when people call for the Fed pivot, when inflation is at 9% and payroll print is 500,000 plus, it just means that after a decade of ZRIP and QE, investors can't think straight anymore. So what it's talking about is the fact that since 2008, and we've mentioned this multiple times now, the sort of asset market class, the risk asset market class, the NASDAQ, the S&P, Bitcoin, has only just gone up. And we've never had to invite or face a period where, you know, things haven't been supported by the Fed. We haven't had to go through a recession. Are we now on the precipices of one? I believe that we are. I think we're already in a recession and it's going to deepen. Talking about the non-farm payroll data, which was extremely supportive of the Fed's monetary regime. I've got an interesting tweet here talking about the tech bubble and the non-farm payrolls versus the S&P 500. And you can see down here in the green and the red, you have the US employees on non-farm payroll, total month-on-month net change. And then you've got the S&P index. And the tweet reads, given the overwhelming optimism on the jobs reports today, a reminder that non-farm payrolls also surged by 500,000 right at the peak of the tech bubble in March 2000. So this is extremely interesting. You can see actually, and we pulled up a chart with the market sniper where we looked at the correlation between the NASDAQ and unemployment. And unemployment's at a record low now. And in order for these markets to continue to rise, you know, we need to see unemployment go down even further, or at least, you know, come down to where it's been. The issue that you've got is given how high inflation is, the pressure that's causing on everyone, the expensive liquidity, you know, that doesn't seem to be a likelihood that we're going to continue to see job growth and unemployment stay low. I think unemployment's about to tick up. Obviously, there's an inverse correlation there with when employment's at a low, the NASDAQ is at a high, and vice versa. And this is really going to play into things. And you can see after this kind of high spike, you see a decline and a sharp one at that. We've got the CPI print actually coming out this month at some point. For the year on year, you know, that probably isn't, I don't think, going to be 9.1. I'd be shocked if that's 9.1. That might be slightly lower. But the issue that you've got is really anything over 4% or anything over what they're calling the neutral rate at 2.5% is, or 2.8%, I think it is unacceptable. You know, inflation, anything above 4% is not great. And this is, I don't think inflation, when you look at your models and you look at your Fed neutral rate, I don't think that inflation is going to come back down to 2%. I think we live in an inflated world now in the sense that asset prices are going to stay very elevated. And, you know, for them to go back and start monetary easing at this point and for that pivot to occur, it would be very counterintuitive and drive inflation right back to where it is now. If we did see a decline and then they pivot as soon as you know, many people are thinking, and markets catching a bid on based on all the bad news, the recessionary news, 2 negative quarters of GDP growth, the high inflation, they're really looking at this being the peak hawkishness. And it may be that they don't do another 75 basis point rate hike, but even if they do a 50 basis point rate hike, that's still extremely damaging to markets, and damaging to the money supply, which is what we're going to get onto with this chart. And then we're going to look at a number of other things. Also do a quick update on Bitcoin, because Bitcoin's at this real key level. It's been very hard for me to make heads or tails of this over the past couple of days in terms of taking long and shorts, because neither are high probability at the moment. Until you've seen some sort of decisive moves in either direction, you're very much just looking to flip a coin and guess. And I'm talking about over the next couple of days, by the way, guys. People love to go, oh, well, that's proof TA doesn't work, blah, blah, blah. TA does absolutely work. You can think that if you want, and I would, from a trader's point of view, rather that more people didn't believe in it and just traded based on what they felt and did. But TA does work, and it's allowed, at this point, hundreds of thousands of people to make extremely good money off of it. Doesn't mean that you're going to get TA, by the way, doesn't mean that you're going to be able to predict the market perfectly. You're living in a dream world if you believe that. And also, being a trader, get used to losing money. TA will just basically give you some sort of an insight over everybody else, in my opinion. That's what I think is part and parcel there. So this is the M2 or M1 money supply, essentially monitored from the United States. We're going to overlay the S&P, and we're going to look. First of all, we'll take this off. I want people to look at what's happened with the money supply since 2008. So this is 2008. You can see right around the time, actually, where the 2008 financial crisis came to an end, is right when they started pumping liquidity and money back into markets. If we look at what's happened since, and there's still a correlation, even in blips in money supply. If we look at what's happened, bearing in mind the money supply is in blue and the S&P is in orange. If we look at what's happened with markets since then, and the money supply has just gone up, and then obviously we had this last little blow off here, where you see, the March 2020 rally onwards, where liquidity is just thrown into markets. I think we're now at the hangover from that. That is unsustainable growth. And if you have these unsustainable sort of curves to the upside, a lot of that is going to be echoed to the downside, certainly when the conditions are completely different. For markets, in my opinion, to continue to rally here, and for all these bottom callers to be right, you are going to need to see, essentially the printers get turned back on. Okay? That I do not think is going to happen. I think it will eventually happen. Unfortunately, the system that we live in, and it means that everybody loses out, is a system of which they have to continue to inflate the money supply to facilitate the repaying of the debts that they owe, and sort of denominate the debts that they already have, right? So I don't think that this money printer, the M1 supply, is just going to shoot back up like it has here. It's unsustainable. Inflation would absolutely skyrocket, and it would just crucify, many people out there. I don't think that that's likely. I think that a likelihood is we enter a period just like we entered, and you can see just how correlated. So let's look at 2000s onwards. Very similar situation where you have a huge inflating M1 supply. You reach this kind of blow off top. It crosses. So can you see how you start to peak down and then you cross? Look at where we are today. You're peaking down and you're now crossing. And then you get the capitulation event, which doesn't end, by the way, until they start printing money. So they start printing money, markets will bottom, and then we'll be back off to the races. Similar thing with the 2008 crisis as well. So I think this does something like this now, which is what we're currently doing after a huge inflation of the money supply. We quantitative tightening, and then we get that rally. But markets have got downside within this kind of quieting down move, if that makes sense. And this, referring back to this tweet here, talking about the fact that investors can't think straight anymore, just because markets have essentially been a rigged game. The Fed has been the ultimate inside trader. They've pumped money into markets. Everybody's been happy with this. Yeah, great. Each political member has just kicked the can a little bit further down the road. Got to remember, Bitcoin's story is very intertwined in this, because Bitcoin was created as a way to hedge continuous monetary inflation from the governments that continue to tax everybody. When you look at the financial game, and as a citizen, it's very much stacked against you. It's why I'm such a believer that financial education should be part of everybody's education, because we live in a financial world, and I believe that we live in a financial slavery. which is for another video. I might do, and if anybody likes the idea of me doing a financial slavery video and why I believe people are a slave to finance, let me know in the comment section. I'll do a full me in front of the camera video on it because I have a lot of thoughts about this. And this is why this channel, one reason this channel exists, because I do believe via investing you can actually somewhat break those shackles and set yourself free. So this is really interesting, and this is really another one metric that we're looking at. You know, we're not just trying to look at one we're not just trying to look at, you know, one indicator or you know, a couple of indicators that are flashing, because the problem with indicators that are flashed and giving you buy signals from in relation to Bitcoin from 2008 onwards is that the environment has just been simply different, and the Fed's had you back, and largely liquidity has been supportive of the rebound. I don't think that's the case now. I think again we're going to enter a bit of a hangover now from all the sort of printing that took place. Just a quick update on Bitcoin. Yeah, Bitcoin, you know, it's it's at this key levels right now. You can see you're actually, when you entered this range, you're actually now broken above it and holding it, right? So for me personally, you know, you're holding this, you deviated below it, you've come back up. You know, you could use this as a bit of a springboard. I'm looking at a number of altcoins that I'm going to be sharing at some point that I'll actually be looking to probably, if I can get the long, we're very tight in validation, look to long just in case Bitcoin wants to start making its way, you know, up towards this last period of consolidation. So maybe we do something like this. I kind of feel like we need that one more stab to send things lower. Ultimately, I do think things do come lower, but in the short term, you know, you can't just, you know, you got to remember markets have literally just, take it off log. Look at what they've done with one rally so far. You have multiple rallies in any bear market, right? Multiple rallies that all get killed off. So it's very natural to, and we've always said this when we looked at the likes of the NASDAQ, if you're going to rally, you're going to rally bouncing off your 200 weekly moving average. Take these draws off, you know? And the problem is, does this continue? It could continue for a little bit, but ultimately I think this gets slapped. No difference. If we look at 2008, you have multiple bear market rallies. The problem is you enter that sort of Lehman's moment, which is what I'm kind of looking at the moment. Look at the dot-com boom. Again, you're going to have rallies along the way, the whole way down. But the problem is do those rallies actually go and start taking out prior highs and prior lows, and then you actually start to put in structure? You know, what supports this now raging bull market? It's summer, by the way, guys. So you got to remember as well, this move's been extremely low liquidity. This hasn't been supportive of big players now going, okay, the bear market's over, we're going to get back in. You know, there's a million and one things. You're playing this three-dimensional game as a investor, as a trader, and you've got to look at multiple sources of not income. You should have multiple sources of income. You have got to look at multiple sources of data to try and build a narrative. And also, when you're building that narrative, understand that you could be wrong. So just because I don't think that the bottom's in doesn't mean that it's not. I just don't think it is. And I think the probabilities are far stacked on the favor that we see lower prices across the board, given some of the things that we talk about on a daily basis. The M1 money supply is a really interesting one. You know, you want any more proof that markets are driven from liquidity? Well, look what happens with markets when your money supply inflates. Inflation has, of course, something to do with supply chain issues, but has a lot more to do with money printing. Go and look at Milton Friedman's speech on tobacco and how inflation works. So that's all I'm going to say for this video. Hopefully you've enjoyed it. It is Sunday, so have a nice relaxing Sunday or a nice energetic one, depending on what you're doing. I'm going to love and leave you on that note, guys. If you've enjoyed the content, a like is always appreciated. So is a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys.